Hi dear traders, last trading week was full of worries over the spreading banking crisis. Any comments by government officials drew markets further away from risk assets. Investors feared that the recent turmoil in the US banking system could spill over into European financial sector. Their attention switched from Credit Suisse and UBS to Deutsche Bank. There is a chance that when this review is out, another bank will announce its bankruptcy. Let's talk about how the risk aversion mood has affected the currency and commodity markets. The US dollar seems to be losing its shine among investors, although they still open buy positions on it as they perceive it as a safe haven asset. However, this trend could change in the near future and the greenback can lose its reserve currency status given the shaky banking system in the US. The US dollar index, which demonstrates its value against the basket of 6 major currencies, managed to hold near the level of 103. On Thursday, US Secretary of the Treasury Janet Yellen said that authorities were prepared to take further action to protect bank deposits if needed. This could mean that the crisis is not over yet. On Wednesday, the US Federal Reserve raised the rate by 25 basis points as was widely expected. However, Fed Chair Jerome Powell said that the regulator was planning to continue monetary tightening this year if this was required. Apparently, this statement helped the dollar stay afloat. The euro approached the 7-week high against the dollar last week but failed to settle there due to risk aversion in the market. Traders closed their long positions on the euro amid the spread of the banking crisis. At the same time, the fresh macroeconomic data released on Friday showed a revival of business activity in the services sector in France, Germany and the Eurozone as a whole. What's more, the European Central Bank will definitely continue to raise the rate as inflation in the region is still running high. As for the British pound, it failed to hold at its peak levels but still closed the week with gains. The Bank of England lifted the rate by 25 basis points on Thursday to combat double-digit inflation. It seems that the regulator will keep its monetary policy tight in the near future. Meanwhile, the Bank of Japan maintains its rate negative at the level of minus 0.1%. This strategy seems to be working as inflation in Japan is approaching the 2% target. When trading against the US dollar, the yen reached its highest level in the past 6 weeks. What was quite expected and logical last week is the appreciation of gold as investors were fleeing from risks to safe haven assets. As a result, gold tested the resistance at the level of $2,000 per troy ounce. Naturally, speculators closed last part of their positions by the end of the week to take profit, yet gold is likely to show a new rise in the week ahead. In the meantime, oil went up last week despite recession fears and the US unwillingness to refill its oil strategic reserves at the current prices. Yet traders maintained a bullish outlook for oil. The price was hovering near $75 per barrel. Apparently, markets have positive expectations as they hope to see a bigger recovery in crude demand in China. These are the trends of the last trading week. Do not miss our daily news reports as well as the weekly review of the stock market, which is due tomorrow. Stay tuned.